And welcome to this Moneycontrol live stream. You're watching a brand new episode of Morning Trade with me, Nandita Khemka. Well, over the next 30 minutes, we'll be talking about all the global cues that are coming in this morning, the setup for trade, and of course, all the stocks that will be making headlines in today's trading session. But if you have any stock-related queries, we'll also have them answered by our technical expert on the show today, Rajesh Palviya. So do keep commenting on our live feed, and we'll have them addressed by our experts on the show. But before we get into all that, let's take a look at the top headlines at this hour. Well, UBS agrees to take over crisis-hit rival Credit Suisse for $3.2 billion in a historic deal, with Swiss regulators pledging up to $108 billion in liquidity assistance. Shareholders of Credit Suisse will take a haircut of over 50%, with the deal being valued at about 0.76 Swiss francs a share. In another bid to avert a contagion, the Fed, the Bank of England and the central banks of Canada, Japan and Switzerland undertake coordinated action to improve liquidity in the global financial markets. Now, the new daily US dollar liquidity swap line arrangement will run from today, and Dow Futures, mind you, is trading higher in trade. Asian markets open largely lower after UBS agrees to buy out Credit Suisse. The SGX Nifty is also indicating a lower start for the Indian market. Meanwhile, oil dives to a fresh 15-month low, while gold surges as investors seek safety in precious metals. And we get you exclusive details on the reasons behind Rajesh Gopinathan's shock resignation as the CEO of TCS, and also discuss stocks like DLF, Tata Consumer, RVNL and Reliance Industries on the show. Well, straight to the big global news coming in this morning. Well, UBS has agreed to buy embattled rival Credit Suisse for about $3.2 billion and will assume up to $5.4 billion in losses in a deal that is backed by a massive Swiss guarantee. Now, the takeover is expected to close by the end of this year. Now, the terms of this deal will see Credit Suisse shareholders receive one UBS share for every 22.48 Credit Suisse shares they hold. And the combined bank will have $5 trillion of invested assets, according to UBS. Now, despite regulators' involvement in pairing the deal, in getting the pairing together, the deal gives UBS autonomy to run the acquired assets as it sees fit. Well, in a significant, this deal could actually also translate into significant job cuts. And Credit Suisse scale and potential impact on the global economy is much greater than US regional banks, which, mind you, pressured Swiss regulators to find a way to bring the country's two largest financial institutions together. Well, that was about the big global headlines. But if you look at the Dow futures, they are trading higher in trade. Asian markets are largely mixed. In fact, Nikkei, Kospi are all trending lower. But SGX Nifty is indicating a lower start for our Indian markets. But let's shift focus to last week's big news. You know, Rajesh Gopinathan had put down his papers on Thursday evening, taking the entire tech industry and markets by surprise. Well, we were jolted out of the blue because nobody had a whiff of this resignation. And of course, our tech editor, Chandra Srikanth, who tracks these IT companies closely, has got some scoops, a big scoop over the weekend as to what led to this resignation. You know, Chandra, we were all scratching our heads as to what led to this shock exit, given the fact that Rajesh Gopinathan's tenure was renewed just last year, right? So, you know, tell us about all the details that you've gathered from inside TCS as to what led to this shock resignation.
Thank you, Nandita. There's clearly more than what meets the eye. The way TCS was portraying it, they said that, it was perhaps monotony and fatigue from earnings that made him call it quits. But we've been speaking to our sources, and this is the story that we in fact broke on Moneycontrol on Saturday, that it was a confluence of factors that finally made Rajesh Gopinathan resign. His boss, N. Chandrasekaran, Tata Sons chairman, was unhappy for a while. They undertook a massive reorganization exercise last year, which did not go down well with senior executives. TCS's growth was lagging Accenture and Infosys. More importantly, Rajesh's people skills, sales skills also came into question. Because he wasn't a people person and he was a reluctant traveler. He wasn't willing to live out of a suitcase and meet clients. So these were some of the pieces that we assembled on Saturday. Let me start with unhappy boss. We understand that at a recent sales event at Doha, N. Chandrasekaran made his displeasure with TCS's flagging growth very apparent. And this was in a room that had CEO Rajesh Gopinathan as well as hundreds of executives from TCS's sales team. So this happened in February. Weeks later, Rajesh Gopinathan tenders his resignation. TCS also undertook a massive reorganization exercise last year, which grouped clients based on their revenue size rather than just verticals and geographies. Now, this did not go down well with executives because they felt it clipped their powers, and there was also no clarity on ownership of accounts. Importantly, Krithivasan, the CEO designate himself, wasn't happy with the reorg, which is why his vertical, the BFSI vertical, which contributes 40% of TCS's revenue, was kept away from the recast and redesign. So if it didn't even have the buy-in of the CEO designate, you can imagine what a controversial reorg exercise this was. Now, let's also focus on Rajesh Gopinathan's personality. Now, there is no doubt he's a brilliant strategic thinker, very high intellectual horsepower, can think through complex problems, but he wasn't the best when it came to dealing with people. We understand that whenever people had an issue, they would go to TCS COO Ganapathy Subramaniam or NGS or Chandra, because Rajesh sometimes could come across as abrasive, could come across as short-tempered. On the client and sales side, now, there are legendary stories about how N. Chandra would literally live out of a suitcase, travel all year long. Well, Rajesh wasn't that inclined to travel. And even when he met clients, he was very protocol and hierarchy driven. He would, only meet CEOs of a companies of a certain size, not the entire rank and file. So it was a confluence of factors that built up. The fact that they've also been underperforming Accenture, which is double their size, and Infosys, which is a smaller size than them. Remember, Rajesh's tenure was also, very CFO driven. He was CFO, he became CEO. So he would always have an eye on financials, have an eye on margins, while his rivals were out there winning large deals, even if it meant sacrificing margins in the near term. So a confluence of these factors built up. It's important to remember here that Krithivasan was a front runner way back in 2017. So in a sense, he's the first among equals now, and people expect more stability in the organization. The fact that he's always been in a client-facing role, he's been running the biggest vertical in the company, should also perhaps help TCS. But it's certainly not, all is well and everything is smooth kind of story. There were a lot of factors that was behind this very abrupt exit, considering he got reappointed only last year and still has 4 years to go before his tenure ends.
Right, Chandra, there's more to it than meets the eye. I also want to ask you to throw some light on the CEO designate Krithivasan's leadership style. You said that, Rajesh was a reluctant traveler, but on the other hand, in the press conference on Friday, Krithi had indicated that he's okay to shift to Mumbai. So what is the, difference in the leadership style when it comes to these two?
So in terms of leadership style, from what I have heard on Krithivasan, he's a very high empathy leader. He's approachable, which wasn't so much the case with Rajesh Gopinathan. So Krithivasan is high on empathy. Krithivasan is a consensus builder. That's the sense I get. And considering he's been handling BFSI, which is 38 to 40% of TCS's revenues, and he's had client-facing roles, I'm sure he knows what it takes, in terms of the client and the deal journey, what needs to be done to win a deal, to scale a deal, and more importantly, to ensure that your, client is renewing a deal. So he's been through that cycle, and his journey is actually very similar to N. Chandra. N. Chandrasekharan and Krithivasan, in fact, graduated from CIT, the Coimbatore Institute of Technology. So they are from the same college. More importantly, they've had the same journey within TCS, learning things from the ground up, from delivery, pre-sales, sales, to handling large client groups. So he's a leader more in the N. Chandra mold than Rajesh Gopinathan perhaps was. And of course, he said that he will move from Chennai to Mumbai, but I think that was largely expected.
All right, Chandra, thanks a lot for taking out time and putting things into perspective and giving us all the juicy details about what actually transpired behind that very shocking exit that we heard of on Thursday evening. Thanks a lot for taking out time and joining us this morning. Well, let's shift the focus to some market technicals then. SGX Nifty hinting at a negative start for the Indian markets. Let me bring on board Rajesh Palviya of Axis Securities to put into perspective what kind of moves we can expect on the Nifty in today's trading session. Good morning, Rajesh. Good to have you on the show. Well, on Friday, it was, in fact, all of last week, we had a very volatile ride. In fact, the Nifty did come under pressure in the afternoon on Friday, but again, late buying, provided some support to the index. But given the fact that this is largely a sell-on rally market, do you expect more such moves this week as well? A lot of volatility going forward?
Good morning, Nandita. Yeah, so we are witnessing volatile markets since last couple of weeks, and still looking at the overall setup for indices, we believe that it's going to continue sell-on rise strategy as of now, because shorts are still there in the system, despite some recovery in the price in the previous trading session from the recent low, but still shorts are not unwind their positions. So looking at the overall data setup on the derivative front as well as on the technical front, we believe that 17,200, 17,250 are likely to act as a major hurdle for this pullback which we have witnessed in the previous trading session. Global markets are also volatile. We have lined up a Fed meeting outcome. So again, market is going to remain volatile for some more trading sessions. Until Nifty not manages to cross above 17,250, 17,300 on a closing basis, whatever pullback we are getting closer to those levels are a shorting opportunity. So sell on rise should be your strategy. 17,300 should be your stop loss. On the breakdown of 17,000, it could be another round of selling we can see in the market, and a market can again go down towards 16,850, even 16,800 level. So as of now, 17,000 is the key level, and on the higher side, 17,200 is the immediate resistance area. If we analyze the Bank Nifty setup also, Bank Nifty is also in the weak zone. We have seen, some support buying action at the lower level. 39,000 acted as a support area, especially in last two trading sessions. But still looking at the overall data setup, shorts are still there in the system. Until Bank Nifty not crosses and close above 40,000 level, whatever pullbacks are coming towards or closer to those level are again shorting opportunity in the Bank Nifty also. On the other hand, once Bank Nifty breaks below 39,200 level, then possibly it may go down further towards 38,800 to 38,500, which is the next put concentration for this March series. So for Bank Nifty, the immediate range which we can see is around 39,000 to 39,800. This could be the possible range we can see. Either side breakout will decide the major direction for the market going forward.
Right, that's the word on the Nifty and Bank Nifty. Let's also talk about an index heavyweight, Reliance Industries. Well, that according to me is the stock of the day, given the fact that the company will re-auction gas from KG-D6 block in line with new government rules. Let's also, not forget the fact that FII ownership in this stock is now at a 6-year low. Over the last 5 days, we've seen this stock, being a major contributor to the losses. In fact, it has lost somewhere around 5% over the last 1 week. And we also have queries coming in from our viewers. Karthik Raja and K. Raja Singh, they both have queries on this stock. Whether it's this dip that we have witnessed on this stock is a good buying opportunity. What would you advise investors to do?
So for investor, yes, it's going to be a buying opportunity. As we have seen for this quarter, almost 12% correction in the Reliance industry, and for this month, almost 4.5%. But the overall long-term structure is positive. But for the near term, yes, some pressure could be there in the stock as stock has broken all its important moving averages in this corrective move. So stock is now trading below all its 200-day, 100-day moving average, which indicates that some more pressure is there in the stock prices going forward. Looking at the near-term setup, 2200 is the immediate level, which is going to act as a support. But if it breaks below 2200 level, then possibly it may go down further towards 2140, 2120 level also. On the other hand, 2320, 2340 are the key resistance area as of now for the Reliance Industry. If stock manages to cross above those levels, then only we can see some short covering action in the stock, and then prices can scale up further higher. But as of now, we believe that some more selling pressure is going to remain in the system for Reliance Industry, and it could be a range bound move we can expect in the coming weeks. So 2160 to 2340 could be the possible range we can see for next couple of weeks from here onwards.
Right, so those are the levels to watch out for on Reliance Industries. Let's also shift focus and talk about some brokerage calls coming in this morning. Jefferies and CLSA have both come out with reports on the cement sector. Now, Jefferies says that cement is likely to be a beneficiary of declining global energy costs. And even, the fact that recent price hikes in fact are missing amid very high competition, given the fact that, some of the price hikes have also been rolled back, CLSA doesn't really see that those developments as a negative catalyst for the sector. And it has actually listed out Ultratech and Dalmia Bharat as its preferred picks. Would you say some of these cement counters are, primed for a re-rating now, and it's time to look at some of these counters now?
So definitely some consolidation action is there in the cement space, and if we compare with other sectors, yes, cement stocks are still holding the ground. But especially if we go with the stock specific in the within the sector, Ultratech is our preferred pick because if we analyze the setup for Ultratech cement, despite of this volatile market or in this bearish market, Ultratech is still holding the ground and trading above 50-day moving average, which clearly indicates that this stock can hold the ground.
Rajesh, there seems to be some technical glitch. We'll just come back to you in a bit and reconnect you. All right, I think the glitch has been sorted. So you were talking about Ultratech cement.
Yeah, so Ultratech is the stock which we like from this pack because the stock is holding the ground and holding the 50-day moving average, which considered to be bullish for the near term as well as for the short term. And even if we analyze on the monthly setup also, since last 3-4 months, the stock is consolidating in a narrow range. And looking at the overall setup for Ultratech cement, we believe that once the stock manages to cross above 73.50 level, then this stock can scale up further higher towards 7600 level also. So buy on dips should be the strategy in Ultratech cement. One can buy and accumulate the stock with a stop loss of 71.50 for upside positional target of 7600. Another stock, as you mentioned, yes, Dalmia Bharat is also looking promising from this pack. Again, the similar kind of behavior like Ultratech cement also for this Dalmia Bharat also. Looking at the price behavior, since last 3-4 months, again, this stock is also consolidating in very narrow range. And looking at the overall setup, we believe that once the stock manages to cross above 1860 level, then possibly Dalmia Bharat can scale up further higher towards 2000 level also. So this stock, again, one can keep on radar to buy and accumulate with stop loss of 1700. Upside positional target could be 1950 to 2000 level.
Right. So Dalmia Bharat and Ultratech are two stocks from the cement space that are looking attractive, and you can actually look at buying on dips. Let's also talk about Tata Consumer. Friday we had aftermarket news coming in that the company has stopped its negotiations with Bisleri for a potential transaction. Now, if you look at the stock, it was up 2% on Friday and it is off its 52-week lows now. What would you advise investors to do? Does the chart indicate more upside, and is it time to buy into this counter?
So since last couple of weeks, stock is in downtrend and series of lower low formation is clearly there on the weekly as well as on the daily chart, which clearly suggests that some sustained selling pressure is there in the Tata Consumer. Looking at the overall setup now, stock is trading near to its multiple support zone, which is at around 700 level, and almost previous close is almost near to those level. So if at all the stock manages to hold the 700 level for next couple of trading session, then some pullback action we can expect in the stock, and possibly stock can inch up further higher towards 730, 740 zone, which is again going to act as a resistance. So as of now, structure is weak. If anybody wants to take some trading back, keep very strict stop loss of 697. If stocks manages to hold this level, then only hold your position long side. And in the pullback, 730, 740 is the area where you can book profits.
Right. Let's also shift focus to a query that's coming in this morning from Sam Joseph. And he has a query in Imami. Now, this stock has been like getting hammered. It's very close to its 52-week lows. Over the last 5 days, it has lost 10%. What is the kind of support level that you would advise investors to keep in mind when they are looking at a Imami now?
So series of lower top, lower bottom formation is there in Imami. And again, if we analyze the daily setup also, stock was traveling in a down sloping channel, and previous day supply pressure has given the breakdown of this down sloping channel. So looking at the near term, short term setup, we are expecting that, stock may face further more selling pressure from the here onward also. If stocks continues to trade below 365, 370 zone, then possibly another round of selling we can expect in coming trading session, and possibly stock can go down further towards 320, 310 level also. The reversal point for the stock is at around 380, 390 zone. Until the stock not crosses above those level, stock will remain under pressure, and possibly it may go down towards 320 level also.
Right. Let's quickly shift focus to our next query then. This is coming in on Cipla. Satya CK has written in and he wants to know your thoughts on this counter for the short term as well as the long term. What are the kind of targets one should be looking out for if they want to exit? What would you say?
So after corrective moves since last 7-8 trading session, stock is consolidating in very narrow range. But overall, if we analyze the structure for near term to short term, stock is in weak zone. It's almost 6 consecutive month where stock is forming lower low formation, which is clearly indicating that some liquidation is happening in the counter. And if we analyze the pharma sector also, again, there is no as such bullishness in whole pharma sector also. So most of the stocks are struggling. And if we analyze the Cipla has given a breakdown of its multiple support area on the monthly chart also. So now if stocks continues to trade below 910 level, then possibly some more pressure we can see in the stock. On the breakdown of 860 level, stock may witness further more selling, and it can go down towards 830, 820 level also. On the higher side, 940, 950 is the major hurdle for the stock for any pullback action. So if stock has to recover, it has to close above 940, 950 level on the weekly closing basis, then only we can expect some substantial recovery in the stock. So as of now, my advice would be to avoid at this juncture, because overall structure for the stock for near term to short term is weak. So further more pressure we can see in the prices going forward.
Right. Very quickly, I want your thoughts on two counters, Rajesh. DLF, well, it was up 4% on Friday's session. There is a slew of positive news regarding this counter. And what are the expectations or what are the hopes that this stock could retest levels of 400? And I also want your thoughts on RVNL, these two stocks.
Yeah. So Nandita, yes, definitely DLF has witnessed some buying interest, and now stock is trading above its 50-day and 200-day moving average. Almost previous day close is almost near to its 100-day moving average. So looking at the overall setup, stock now managed to give breakout of its previous swing high of Fab, which was at around 372. So now stock continues to trade above 370, 372 level, then possibly, yes, stock may get some more buying interest from the current level, and possibly stock can inch up higher towards 400, 405 level for the for in this continuation of this rally. So those who are already holding the position or those who are going to buy this stock, keep stop loss of 362 to hold your long position up for upside target of 400, 405. If we analyze the RVNL, stock is in corrective move. We have seen a strong rally in previous months, but still since last 3-4 months, stock is in consolidation. So overall long-term setup for the stock looks to be bullish. So buy and accumulate could be the possible strategy in this stock. Our advice would be to buy and accumulate in the range of 58 to 66. Once we get the breakout above 66, then stock can exhibit some more bullishness towards 75 to 80 level in the near term to short term. keep a stop loss of 55 to buy and accumulate the stock in 58 to 66 range.
Right, Rajesh. Well, we are completely out of time on this edition, but quickly, if you can tell us what are your stock recommendations for today?
So I have a mix buy and sell recommendation. So one stock which we like from FMCG pack, that is Godrej Consumer and Product. Stock has given a good breakout on the daily as well as on the weekly chart in the previous week. And looking at the stock, we believe that if stocks continues to hold above 940, then possible upside target we can expect in near term towards 965 to 980. One can buy with stop loss of 925. Another stock which we like on the buying side, that is NTPC. Strong chart structure on the short-term basis. Looking at the overall setup, we believe that if stocks continues to hold 170 zone, then possibly stock can exhibit further more upside towards 185 to 190. So one can buy with stop loss of 170. The stock which we feel that can show bearishness, that is Emphasis. Emphasis is looking weak. And looking at the overall setup, we believe that one can go short with stop loss of 1940 for downside target of 1820 to 1800.
Right, Rajesh, thanks a lot for sharing your recommendations this morning, and thanks a lot for taking out time and addressing all of your queries as well. Well, with that, we're completely timed out on this edition of Morning Trade, but don't go anywhere because coming up next is Opening Bell.